Everyone, welcome to a new episode of Investing Fool. It's the middle of January, so in today's video we'll be discussing the few changes that have happened in the portfolio in this cycle of rebalancing. So let's get started. Please pause the video and read the disclaimer for your own benefit. So where are we in the middle of Jan rebalancing? So the update is that we have 5 exits, 1 large cap, 2 mid cap, 2 small cap, and 5 entries, 2 mid cap, 2 small cap, 1 micro cap. We'll look at the charts and we'll look at the stocks as well, but the purpose of this video is not to talk about these stocks in particular, but then the overall trend regarding them, right? It's the first micro cap stock that has come in the portfolio, so you can see this green part here. So that's the that's the micro cap stock that has come into the portfolio this time. This may be like on account of the fact that in the initial leg of this correction, the small, mid and micro caps were not getting as much correction or were not seeing as much pain as the large caps. Slowly that pain has trickled to them as well, but even then, even the brief sort of not recovery, but whatever, like at least we have not lost too much. Even in that space, the mid and small cap stocks have shown a fair bit of resilience compared to the large caps. But this is a developing trend. So in this time we haven't got any large cap stock entry, and we've gotten the first micro cap stock in the portfolio. You can see here on the right hand side the screen region. So let's talk about a few exit metrics, and then we'll take a look at the portfolio as well. So winner percentage, which is the number of winning trades, has declined from 38.4% to 37.2%. That has happened because this time we are having 5 exits. Out of 5 exits, there are 4 losers and only 1 winner. So 1 large winner is there and 4 losers are there. Net actually, even in these 5 stocks, we have lost money. So winner percentage has declined and loser percentage has obviously increased from 61.6 to 62.8%. Average gain on winner has improved from 24.8 to 25.4. This is on account of the one winning stock which has gone out with around like 45% gain. So that has increased the average a little bit. Average loss on loser has worsened by a little bit from 10.9% to minus 10.9% to minus 11.2%. So you see the divergence has actually increased between the average gain for the winners and the average loss on the loser. So they have like went further apart, right? So the losers are seeing larger losses, the gainers are also seeing bit larger gains. Average holding period is up from 85.0 to 88.7 days. This is also on account of that one winning stock which was there in the portfolio for more than 300 days. And if you have been following this channel for some time, you would know that it is we'll probably talking about Kalyan Jewellers here. So this is the chart of Kalyan Jewellers. So you can see we took a position around here in the middle of March. It gave quite a bit of gains. Then it tried to go above this level for quite some time. It couldn't, right? If you had exited, so it went up crazy like this. If you had exited here somewhere, it just didn't give us the signal. Then it would have been much better. The journey would have been much better. But the correction has been really brutal in the last few sessions, right? And it has fallen by like more than 30%. If you look at this, it has erased virtually all the gains that was there in the last 6 months. So last 6 months, the stock has actually now at 0% returns, right? So one of cases like these keep happening, and I know there are like rumors about the company inducing brokerage houses, some brokerage houses and some mutual fund houses about on buying their stocks, sort of. So these kind of like, these are rumors at this point, allegations. Whether they come true or not, we do not know that. We have no way of like preempting such things, right? These if these malpractices are proved or whatever, we can't avoid such cases. We have no way of preemptively knowing that, and these do happen in bull market. Like these would happen more in bull markets. All these frauds, all these malpractices, whatever you can call them. We have several news actually coming, right? There was one front running allegation on one popular mutual fund house. Then this is coming. Then there would be several such pieces that would be developing in the bull markets, especially in the late. They would be coming to public limelight in the late stages of the of any such rally, right? So The second point is that you will always lose some gain from the top. Now, some gain doesn't mean a drastic gain like this, right? This happens, this doesn't happen very usually. Like you would have maybe left somewhere around here, like after correcting around 25% or whatever, or after getting a slow exit signal. There are a lot of stocks which show a slow transition to their momentum fading or plateauing, and then you gradually exit out of them. But these are like pure falling knives, right? You just see a lot of correction squeezed into very few sessions. So by the time you get to your rebalancing, a lot of like pain has already unfolded in the market, and there is no way of saying that the pain hasn't stopped, right? It can go further also. Now a weekly review, so we are doing bi-weekly rebalancing, right? So within the weeks also, like at the end of every week, you can check which stock has fallen more than 25%, because that is the secondary exit criterion that we use from the all-time high, and then you take out those stocks. But then again, you have to consider that that money, you can either redeploy it in a new stock on that same day, which means you are now entering into new stocks on the non-rebalancing days as well, or you can keep them in cash till the next rebalancing. Now all this jugglery, right, it's a two-edged sword also, because sometimes what happens is, you are, let's say you have a monthly rebalancing, right, and you take out some stock after it has fallen by quite a bit. Sometimes it is seen that like in long rallies, they often recover also quickly, right? Many stocks recover also quickly. They will fall and then they will come back in. So there would be false signals also. So it's a two-edged sword. You can take your personal preference. The limited impact, like the impact over the long term is very limited in my opinion. The last point that I want to highlight, and this we had discussed previously also, is that percentages do not work linearly, right? The base is different when we are going up and then going down. So 100% up and 30% down actually amounts to 40% up, which is not very intuitive if you think linearly, but most of you would be knowing that. We have discussed that previously also. So this is exactly kind of what has happened in Kalyan Jewellers. It was almost at 100% gain. We were sitting almost at 100% gain. Then it lost 30% from there, right? So if you're at 100, you go 100% gain, you go to 200, then you lose 30%. You're basically back at 150, 140. So net you have gained only 40%, and this is exactly what has happened in case of Kalyan Jewellers. Now there are a few other things that I wanted to discuss about this rebalancing, but let's take a look at the exits first. So these are the exits. You can see these 5 stocks that are there at the end of, and January has seen a fair bit of churn here. You can see in November also we saw some correction, so there were a lot of stocks that had exited at this point of time. In Jan also, like we have seen some bit of correction, as you all know. So lots of exits here as well. So the last 5 exits that you are seeing, those are the exits we did today. So you can see one is a winning stock, the other 4 are losing stocks, and 2 of them have they have exited because they have fallen by more than 25% from the all-time high. This includes Kalyan Jewellers, and the other 3 have fallen because they gradually like their ranking has declined and they are out of the top 50 ranks, which is the first criterion for our exit. So we also need to discuss the cash call, right? Because we have, like, as part of this strategy, when our equity curve is below its 200-day DMA, and the Nifty 500, which is a base index, that is also below its 200 DMA, then we do not take any new entries. Typically we exit, and if those 2 conditions are met, that kind of goes to cash till the next rebalancing day, when we see that at least one of these curves is above their 200 DMA, and then we kind of exit, make new entries. But this time, and this may continue forward, I will change the information in the strategy tab of the sheet as well. But I am kind of veering towards, and this time I'm experimenting with it this time, but I may stick with it with this approach in the long term as well. So I'm optimizing for the maximum time in the market, like being present in the market, like not that cash not staying as cash, but it being deployed in whatever stock is showing the strongest momentum even in this correction, right? So I'm optimizing for the maximum time in the market versus like fearing large crashes, right? So there are 2 parts. There are obviously CAGR and there is drawdowns. So what tests have shown is that if you follow some sort of trend filtering, like let's say you are not taking any new entries, or you're going fully cash if the market is below 200 DMA and all that, uh, so you can limit drawdowns in case of large falls, large fall events, like let's say 2008 crisis or something like that, COVID maybe. But you lose a part of the recovery from the bottom, right? So your overall returns in CAGR terms, they get a bit depressed, but your performance with respect to drawdown improves. So it's about what you want to optimize for. The other thing is that this, like in a sideways market, it could lead to a lot of churn, going in and out of cash repeatedly, right? You go to like you take that cash call, and again you come back in, again the market doesn't go anywhere, next rebalancing you again go to cash, partially go to cash, again you come back in. So this approach, the one that I'm taking right now, to not have any cash call, right? Like whatever you're doing, if you the market going down, then you go down with it. If the market comes up, whenever the market comes up, you are there to leverage that recovery as well. So this is actually simpler because you eliminate the cash angle completely. You and like if you look at the like momentum indices also, which is created by NSE, right? They never go to cash. Like the only situation where you would go to cash in this kind of a setting is when you do not get any new candidates, right? So let's say, and this is another point that I wanted to discuss. This is the third point, that investable part of the universe has shrunk. So we use the Momo India screener, the link you can find in any of our video descriptions. That like you can see the number of stocks that are that are qualifying to be ranked for as part of the momentum screening, right? So typically in good times, I've seen the number going up to whatever filters we apply, right? I've seen the numbers going up to like 220 or 240 out of the 500 stocks. Nifty 500 has 500, right? Then in small corrections, it goes down like 160, 140. I think day before yesterday that number was around 107. So only 100, based on your filters, based on my filters, the one that I use, only 107 stocks out of 500 stocks qualify for the ranking in the first place. And for Nifty 50, it was something around 14 stocks or 12 stocks, something like that, out of 50 stocks. So a large chunk is already eliminated, right? Whenever these kind of corrections happen. So the investable part has anyway shrunk, and then you are ranking them, right? So whenever the correction is so bad, like let's say all the stocks have fallen by more than 25%. Let's assume that for a moment all the stocks in the Nifty 500 universe have fallen more than 25%. Then obviously this strategy will go to cash, because there are no new candidates. You are not getting any new candidates to put your money in, right? So obviously all the money will move to cash. But based on these kind of lagging indicators, like 200 DMA and all that, we are like, I'm stopping this cash call for this time, and I'll probably continue with this approach later as well. But I'll keep you updated. Whatever we follow from the strategy kind of evolves over time, and this is more of a personal choice. There is no one way. It is more of what you want to optimize for. If you want to optimize for returns, the risk will also be higher. The risk of having large drawdowns always remains. If you want to optimize for drawdowns, you will lose some of your returns. So that's the way you can look at it. Now, older stocks which have remained in the portfolio for a long time. So let's take a look at the portfolio only. And at the bottom, you can look at the names of the stocks that we have added this time. Again, the purpose is not to discuss about these stocks in particular. It's just informing that the new stocks are added at the bottom. So why I had come here originally is you can see the old stocks, right? For example, Trend, Zomato, which have stayed for quite a bit of time. Their momentum continuation is not is kind of losing steam. It's not as apparent. Some of the newer players which have come in, and some of the newer players which are maybe not in our portfolio but which are there in the momentum screener, they are showing better momentum strength, or at least momentum preservation. Okay, so Okay, let's get back here. I don't think there's anything more here. So we'll take a look at the outgoing stocks and then the incoming stocks. Now we have five, but for illustration purposes, I've shown only four here. You can anyway check the details on the sheet anytime. For those of you who are watching our videos for the first time, this sheet, all our portfolio sheets, the links are present in all of our video descriptions. You can find that anytime. They are free, and obviously, like whenever we enter, whenever we exit, what stocks we are buying, when we are exiting, all those things you can find on that sheet. Okay, so outgoing stocks as we discussed, Kalyan, we have already discussed. Then we have, you can see the basic trends. Let's ignore the stock names, and actually stock names I had actually hidden purposely in the last video, but this time the problem with hiding these names is that I myself, when I look at these charts, if I haven't memorized it, that which one was top left, which one was top right, I myself might forget, right? So it also doesn't help me put the context right as well, in terms of the sector, in terms of basically anything about that stock. So for now I have just kept the names again. So you can see the last two are from pharma space, and pharma being defensive also, like there is again, this I have said before also, you can lose your money in the stocks that have shown good momentum as well. There can be stocks whose momentum is plateauing out in those sectors as well. Obviously having sectoral tailwind is a big plus, but doesn't work all the time. So you can see Jubilant Pharma, Piramal Pharma, both we have actually caught the top here. That is happening quite regularly actually. We have caught the top here, and then the stock actually tried to break through this quite a bit of time, but again this correction that started from here, it just didn't stop. The stock is now at its 200 DMA. For Piramal, it was a slow churn. Like it basically got out of the top 50 ranks. It hasn't fallen as much as this one. Kalyan is also below its 200 DMA. OFS is also below its 200 DMA. You can see we entered here. This green arrow indicates our entry, and here is where we have left it, despite the good performance of the IT sector. This is yet another example. Okay, now let's take a look at the incoming stocks. Again, incoming stocks are 5, but I'm only showing 4 here just for illustration purposes. The trend that you can see here is that if you look at, so this is the micro cap stock that has entered around 11,000 crore market cap, Vijay Diagnostics. And you can see the correction here in the last few days. Most stocks have seen some correction. Newgen actually shot up quite a bit yesterday and then fell quite a bit today. And before that also it had shown correction. The only stock which has really not shown much correction recently is BSE. It is at an all-time high. It was up like 3% or something today. So, and BSE we have entered previously, made loss in that counter, and exited with a loss, right? So this time also I am not very helpful. It was around this region. This is the part where we had entered BSE. You can look at the kind of momentum that it had shown, and previously also if you go back from this time onwards, the momentum was okay. It was great. It was relatively high beta, but it was great. But then it completely faded for a few months, and we got out somewhere around here maybe. And then again it started inching higher. The beta was again high around this time also. We didn't get in here. The beta now has it is around 1. And again it has created a new high. I'm not very sure personally. I do not feel that we are going to make money with BSE this time also. I have a very that's just a personal inkling. Again, when you are going with a system, then your personal biases you have to keep to the side, and whatever names you are getting, basically you have to buy into them. But I have a personal feeling that this time also I am going to lose a fair bit of money on BSE, but let's see how that pans out. Coming back to the portfolio, so in terms of sectors, you can see that pharma, IT, healthcare, so pharma and healthcare, IT, financial services, these are the sectors with the most weightage in the portfolio as of now. These are considered defensive sectors. I'm not sure if the market is going to move there. If you actually it has already moved there. I'm saying in this recovery, if you look at today's movement, right? So all the defensive sectors have actually are in the red, and all the other ones you can see Nifty PSU up 2.5. and CPSE is up 1.4. You have FMCG, IT and pharma. These are the defensive sectors of the market. These are the only ones in red today, and the other ones are having a better day, right? Portfolio, again, one day performance we shouldn't look at on the rebalancing day, because it is clouded by these 5 as well. You can see some large movements there as well. Okay. Net at this rebalancing, at least we have, even in absolute terms, even in pre-tax terms, we are below the Nifty 500. So absolutely terrible performance by the portfolio. But if the good times come, I'm very hopeful that staying in the strong stocks, that general, you have to have that general belief when momentum is like when you are picking stocks based on momentum, that it is based on historical data and it is based on an observed anomaly, right? So you have to stick with that, and that will pay you off in the long term. So RSIs, we can see for these stocks, the RSIs are typically at a lower length. So that is also on account of this correction, right? Typically when there is no correction, the bull run is just extending, then you get stocks with RSIs of like 90, sometimes it can be whatever, right? 80, 85, and pretty much in the oversold territory always. But this time you can see like all of these stocks, none of them are in the oversold territory as per the RSI. So this is like 46, 50, 54, 67 is the highest, right? At 70 it is typically said that it gets oversold. And that's also for BSE, which has shown some really great growth in the past few sessions. In terms of market cap, you can see BSE is fairly close to being a large cap company. So that's how the churn, that's how the the breakup is, and Coromandel is another which we have not shown on this chart. So that's pretty much it for today. Do let me know in the comments below what, like, if you rebalance monthly or weekly, if you're going into cash this time around, what new stocks you're taking in your portfolio, which new sectors you have a positive outlook on, so we can get the conversation going. And that's it for today, and I'll see you in the next video. Like the video if you like the content, subscribe to the channel if you haven't. See you in the next video. Bye bye.